Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it hiding in plain sight because I think that's exactly what this bear is doing. And we're going to talk about that. So let's start off here. And we're going to focus today on the Nasdaq Composite. And we'll talk about the Qs also, which is very similar to the structure in the Nasdaq Composite. And we'll talk about the Russell 2000 ETF IWM. Then I'm going to look at the SOX index, which is the Philly Semiconductor Index, and 4 semiconductors, AMAT, Micron, NVDA, and AMD. All right, so let's start off here with the Dow, the S&P 500, and the Nasdaq Composite weekly view. And you can see the Dow was down only 54 points this last week, but it was a lot higher at one point and then came back down. Let me double check something. Yeah, I wasn't sure if I had the date right for the high, the number right for the high on the week, and it is. So this almost looks a little bit like a Harami cross to me. And also when you look at the top that occurred here in the Dow, this picture right here looks similar to the end of March, somewhat similar to back up here in January, but a little more similar to the end of March. So it's going to be really interesting to see what kind of follow through do we get this week? And that's real key because you look at the Dow, the S&P 500 was down 52, and it's a potential reversal candle also. And the same thing on the Nasdaq Composite, which was down 342 points. So again, potential reversal candles in here, but we need follow through the downside. We need the next week here to continue on down. All right, let's go back to the home page. We're going to take a look at the Nasdaq Composite. This is what I call my moving average view, where I have all my indicators, moving averages, and that type of thing, all the technical type of things I look at on the price chart of any index or instrument, stock, etc., ETF. So this is the picture on the Nasdaq Composite. Now here's the low that occurred in June, and here's the high that occurred, intraday high that occurred back here this last week. And yeah, it's up 24.8% off that June low. So everybody's starting to get excited. Oh, wow, we're up 20% or more off the low. Are we in a new bull market? Not so fast. I don't think so. Let's just take a look. We're going to look at the Elliott wave picture in a minute. But just for grins, let's just take a look at what happened in 2000. And is this kind of move something special? Does it mean it's the start of a new move? Well, let's go take a look. Let's go back over here to 2000, and you're going to see several moves down. Okay, so look at here's the March 2000 into the May 2000 low. That's only 2 months. It was very dramatic. Yeah, it fell right out of bed. 41% rally in less than 2 months. Well, actually, maybe it was a little bit more like 2 months. 41% rally from intraday low to intraday high. Here's another 28.5%. And I'm not catching everything. I mean, this looked like a pretty good retracement of this move down here. Here's another 43.7% move off of the April 2001 low. And then here's a 51.3% move off the September 2001 low. And then eventually the market finally bottomed, at the end of 2002. So those were just a few that jumped out at me. So I wouldn't get too excited about the fact that just because we are 24.8% off the June low in here, it's a bear market. And here's why I believe that, because we've had 5 waves down, and here's the 5 waves, and this makes the first intermediate wave. Now, in Elliott wave theory, Elliott wave principle, there are 2 types of waves: motive waves and corrective waves. Motive waves are the progressive type waves, tell you the direction that you are in. Okay, corrective waves always correct part of that motive wave. In motive waves, there are always 5 waves. In corrective waves, there are 3. And then there's always You can go into a larger degree or a smaller degree within each one of those, the wave structure. But what this tells you is once you have determined you have 5 waves down, that is the primary direction of this market right now. Okay, so the primary direction of this market is down. And what are we getting right now? We're getting a corrective wave of that first 5-wave move down. Okay, so that's what's going on. And so the real challenge is, has this corrected enough? Has it gone deep enough? Okay, so right now, this looks to me like a zigzag. A zigzag is an ABC, a 5, 3, 5 type structure in here. And I think we're very close. I think we may have hit that high this last week with the high here on, when was that, Tuesday that occurred? And so if that's the case, we should be breaking down. We should continue to get follow through to the downside. Now, what I do like is I like the way it broke this trend line between 2 and 4 in here. And let's just take a quick look and say, okay, how much of wave 1 did wave 2 retrace? Well, we didn't quite get to 50%, but here's the targets that typically you start to look at. The S&P and the Dow have gone up into this retracement zone. I call it 50 to 61.8%. This and the Russell 2000, I don't believe, have gotten above the 50% level, but you don't have to. But here's where we are. Okay, so right now, looking for follow through, and you go back and look at the moving average view. Here we are getting a first close below that 10-day moving average since back over here on July 26th. But again, you need follow through to the downside. You need a couple of days in a row. Here we got a couple, but did they really break the lows in here? Not very substantially. It's very minor break. You're going to know you're into that downtrend when you start seeing this like this kind of price action, okay? When it starts to roll over below that 10-day moving average, we could be right there, and that's what I'm watching. Okay, so that is the picture on the Nasdaq Composite. Well, let's take a look at the Qs real quick because it's the same thing. I mean, you can just see the Qs are doing the same thing. I've actually got the same wave count. We're actually had the same kind of retracement in here. So it's the same picture on the Qs. We're looking for this wave 2 to start, wave 3 to start, intermediate wave 3. To the downside. So it should be fairly dramatic. Wave 3s are usually the strongest waves. So we'll see. We need a little follow through just to let us know that this thing is truly here. We've had several fake outs. I'm talking about these little minor fake outs in here. But right now, when I look at a lot of different indicators, a lot of different things, we are right there, I believe, on the edge. We are right getting ready to roll over. Okay, the clock is ticking on this retracement on this intermediate wave 2. All right, let's take a look at IWM and let's go back to the moving average view. Okay, so here's how this looks. It's doing the same thing. It closed below that 10-day moving average. Let's go to the Elliott wave picture. And I've got the same kind of picture in here, ABC, same kind of retracement. I also believe we had 5 waves down. It's an expanding leading diagonal pattern. 3 is greater than 1, 4 is greater than 2, 4 overlaps 1, okay? And so now, we're looking at this retracement level, and it's the same picture. And I do think we're there. And let's just take a look at the ratio 2 versus 1, how deep. Again, a little bit deeper than what we just saw in the Nasdaq Composite, a little bit deeper. Didn't quite get to 50%, but very, very close. Okay, so that is the picture. We're continuing to watch for follow through to the downside. All right, now I want to take a look at the Philly Semiconductor Index, and then let's just see what's going on with several of the big semiconductor stocks. Actually, so just to close the loop on the initial title of this, again, why do I believe that this is a bear hiding in plain sight is because people are starting to get deceived into thinking that we have a new move to the upside, a new potential a bull market. And yet we have 5 clear waves to the downside in here. And we're seeing it on multiple indices. And that's telling you the direction of the path of the market at this point in time. Okay. So the direction is down. We're experiencing a counter trend. The direction, the main primary direction of this market will resume. Okay, so now let's take a look at the semiconductors. Okay, so here's my take on the semiconductors. Very similar to what's going on with the Nasdaq. Why? Well, you know, the technology stocks are a pretty dominant force into the Nasdaq and the Nasdaq 100, etc. So again, I think we've got 5 waves down in here on the Philly Semiconductor Index. Intermediate wave 1 bottoming on a little bit later than the rest of the market, though. I've got this bottoming here on July 5th, is it? Yeah, July 5th is the date in here. Okay, and now we've got this counter trend move. This was a little bit funky in here, but here's what I think's happening. We've got this zigzag, an ABC. But you look at this and go, well, what's going on with the C wave? Well, I think it's an ending diagonal pattern in here for a C wave. When you have a zigzag, the A wave is a 5-wave move. The C wave is a 5-wave move. The C wave can be either an impulse or an ending diagonal pattern. And I think that's exactly what we've got going on in here is an ending diagonal pattern for the C wave. We're getting the overlap. We're getting beautiful non-confirmation on the RSI. So now what do we need to see? We need to see it continue to break down and take out the lows in here, okay? And it looks like it wants to do that. So we'll watch to see, does this week give us the follow through that we need? Take out this low right here, 388.52. All right, let's take a look at some of the semiconductor stocks. And let me see. I'm going to start off with AMD. So let me come on down. Let's take a look at AMD. What I want to do is just go to the moving average view. So AMD had their earnings release on August 2nd. Now, it's interesting. You know, it was after the market here on August 2nd. So it was down slightly the next day, had a pretty good rally 2 days later, but then that's pretty much all she wrote, and it's been chopping around since then. And where it closed, it's actually, what, 95.95, down 449 on Friday. Pretty strong down day in here. And it's now lower than the close right before earnings was released. Closed 99.29, so we're down about almost 4. And even the day after, from the day after, it's down. So now it looks like it may be on the verge of starting to roll over a little bit. Okay, so that is the picture. Again, the picture is very similar to what we've got with the the Nasdaq Composite, the Semiconductor Index, of course, the SOX Index. Let's take a look at number 2, Micron Technology. So this had earnings out on August 2nd. Micron Technology on August 9th didn't have earnings. They warned of, quote, significant sequential declines in revenues and margins. Their earnings are coming out on September 28th. So here was the very negative reaction to what they said here on the 9th of August. And then we bounce back, and then look where we are. We're coming back down again, and we're in this mode. It just looks like it's rolling over and about to break down. Same kind of picture. It's interesting. The high that occurs back up in here in January bounced around what? The 2000 high. Yeah, I'm talking about the 2000 peak of the tech stock extreme, the tech stock extravaganza, I guess you could call it. And that's basically what Micron has done, is through all these years worked his way right back up to that, and then has done nothing but sell off since then. Okay, so this is the picture on Micron. We'll see how negative this wants to get, watching this trend line for a break to the downside. All right, let's take a look at Applied Materials. Okay, AMAT just had earnings come out on Thursday after the market. Now, it's really interesting. Same kind of picture, right? Here's the high, January 14th. It's interesting the Nasdaq peaked back in November, but some of these semiconductor stocks really didn't peak until in January with the S&P 500. But yeah, this has been the same kind of picture to the downside, declining highs, declining lows. And now we've got the same kind of swing picture here with the trend line and the breakdown. So earnings come out, earnings exceeded expectations. They upped their revenue outlook, I think. I can't remember. They had a positive outlook, if I remember correctly. I don't remember all the details. And the stock closed on Thursday at 108.27. And I remember in the first couple hours in the aftermarket, it was trading well over $2 higher, up around 110, etc. What did it do? The very next day, opened down. It opened at 106.63, down about 1.5 points, 1.6, etc., and just continued to sell off and closed down $3.64. So not a very positive reaction to their earnings picture in here. And again, they're looking at the same kind of potential decline. We break this trend line, I think we are at a minimum going to be attacking these the lows. In this case, it's the July 5th low. Okay, so that's AMAT. Let's take a look at NVIDIA. And I think you're going to see very, very similar. Now, NVIDIA, see, look at the same thing. Look at the counter trend move that we've had, the trend, the move to the downside from the peak. Now, this peak was back over in November with the Nasdaq, when the Nasdaq peaked. So this was November 22nd. Same kind of picture, okay? And we have earnings coming out here on NVIDIA on Wednesday, August 24th. So that's going to be really, really interesting to see. What do they say in terms of their earnings, or their outlook, etc.? And right now, this is looking and acting like all the other big boys in the semiconductor area. So I don't know. It doesn't look all that great. We'll see what kind of follow through we get this week. All right, that is the picture right now on the semiconductors. They're in a pretty solid downtrend, pretty much in sync with what's happening with the Nasdaq Composite, the broader indices, and we're expecting a continued movement to the downside. It looks like intermediate wave 3 is about ready and may have already started to the downside. All right, if you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button. If you'd like more of this information on a regular basis, head over to joehenches.net. Check out the website and the membership. Everyone have a great week. We'll talk to you on the next video.